Hello, Marty DeGrama here. Welcome to my channel, Crypto Data and News. I share the crypto news of the day. If you enjoy what you're seeing, give me a thumbs up and please subscribe to my channel. Enjoy the video.
At this point, you've probably already heard that a series of Bitcoin ETF applications have just been denied by the SEC in the US. Now, there's still a pending application from the CBOE, the most important one in my personal opinion. I believe the approval is set to come out on September 30th. But be that as it may, the crypto markets have not reacted overly negative, it would seem, to the rejections that we just heard of. Actually, as I'm recording this video, the markets are going up. We're going to have a look at that in a minute. Recently, I did a video where I talked about the situation in Turkey. The Turkish lira has completely plummeted, and there was an article pointing out that this has led to quite a significant increase in crypto trading, specifically in Bitcoin investments in Turkey. Also, Venezuela, a lot of people in Venezuela are seeking into cryptocurrencies simply because their national currency is extremely unstable. Extremely unstable. I'm just going to stress that here. Now, I've often asked myself, the time I actually had a long conversation with one of the team members of Well about, wonder what would happen to crypto in general and Bitcoin specifically if we see, or rather when we see, a global financial crash, or in more layman's terms, a stock market crash. Now, no trees grow into the sky, so at some point, a growing market will face a correction, and the more significant the growth is, the more significant the correction will be as well. So why am I talking about that? I'll get back to that a little later. But first, let's look at this article on Wall Street Journal. US stocks poised to enter longest ever bull market. Well, basically it just describes, here you can see it, this is 2009. And the growth ever since these are several of the biggest indexes tracking, a series of big companies in the various territories. Now, this article does a fair job of describing this growth and how it's been going and how it's likely to keep going for yet some time. But there's one section in this article that I found very, very interesting. So this is really, really crucial in my opinion. Companies in the S&P 500 technology sector make up 22% of the current bull market's return, according to S&P Dow Jones indices, with Apple alone accounting for 4% of the gain. Four companies, Amazon, Microsoft, Apple, and Netflix, account for 40% of the S&P's nearly 7% gain for the year. These four companies combined account for 40% of the growth for this year so far. I think that's significant. Now, these are all tech stocks, obviously. Let's have a look at, and maybe you've already heard of this, but let's just have a look at the Facebook stock. So this is the 1 year chart, and I'm assuming some of you have already heard about this, but look at the plunge it took back here on July 25th. It basically went from $218 roughly to $171. And this is not crypto, mark you. This is the stock market. So and honestly, so they did have a little recovery here, but it seems to be on a downtrend again. And of course, when you consider that these four stocks account for 40% of the total growth, and Facebook is one of these tech stocks, you could worry that if these other companies, if the general tech sector, which may be overbought, if that's hit really hard, that could truly affect the stock market, which could affect many other global financial markets as well, just as we saw back in 2007 or 8 rather. And yeah, so let's move on to something else. This article describes historical bear markets. We had one from 29 to 32, 61 to 62, 68 to 70, etc., etc. But what I really want to look at here is not how long they lasted, but it is rather the intervals between the crashes. I'm just going to refer to them as crashes, bear markets, if you will. From 32 to 61, that's a long time. That's almost 29 years. From 62 to 68, 6 years. From 70 to 80, 10 years. 6 years, 10 years. 82 to 87, 5 years. 87, 2007, 20 years. And now to the exciting part, ladies and gentlemen. 2009 to 2018, 9 years and counting. And let's just look at it again. The US national debt clock. Historically speaking, now that we're talking about history, gold has been an asset class that has, and this is again very broad strokes, this is a little generalized, it's been growing over time. It has been continuously growing over time. But as we can see here, this is gold futures that has been tracked here. And as you can see, over the past month, it lost 3%. Over the last 3 months, almost 10%. And over the last year, pretty much the same thing, down over 9% over the last year. If you're a gold bug, that's not how it's supposed to be, right? That's really not how it's supposed to be. And let's look at this. The same thing. This is the 1-year chart for gold, and as you can see, there's clearly a downtrend going on. It was last high here around 1379, and now we're at 1100, almost 1200. And that may not seem significant to you, but gold is a huge asset class. It's widely spoken of as one of the safest, most stable stores of value. Stable in the sense that the price changes very little, and when it does, it's usually in a positive direction. So this is something interesting. This is weird. This is a new development. And why not just make this comparison? So let's just look at Bitcoin versus US dollar. Compare that to gold. And of course, this is the data that's being pulled from CoinDesk. And of course, once we compare these, gold looks like it's flatlining. It's not really, but it's because it's compared to something as volatile as Bitcoin. But honestly, compare these two. This is over the past year. And gold, in a greater perspective, gold has been relatively stable, at least when compared to Bitcoin. But Bitcoin has actually had quite a significant growth in that same period. Of course, we have been facing this major correction, as we all know. But still, this is significant. Now, it's a historical fact that no stock bull markets last forever. We just saw an overview over the historical bear markets, crashes, if you will. Now, we also know that, we've seen evidence, and I do realize it's not a lot of empirical evidence, but we have seen some evidence that when national currencies take a hit, when they're very unstable, people flock to other asset classes. They basically have to protect themselves from not losing from not just losing everything, more or less. Now, traditionally and historically speaking, gold has been the #1 go-to asset class to flock towards in times of crisis. But we are seeing some fairly decent evidence that, at least in the case of Venezuela and Turkey, that people with these stressed economies flock into crypto as well. I think this is very interesting, and I think when, I keep saying if, but when we see US stock market crash, that's going to create a domino effect that's going to affect all the other financial markets in the entire world, and many economies will probably be facing one of their biggest stress tests ever. And I cannot even begin to imagine. Now, one of the examples in an article I looked at a few days ago, so they looked at a specific crypto exchange in Turkey, and they made the observation that the daily trading volume had increased with, I believe, 350% or something like that. Now, again, these numbers were relatively small, and again, the sample size is tiny, so it's not, from a scientific point of view, something that's very, it's not like something, it's an established fact yet, but I think it does provide us with a pointer of what could happen. But just think about if the daily trading volume of all crypto trading in the US increased with 350% from one day to the next. And it could easily be even more. I'm just saying the implications of that would be tremendous. And honestly, the more regulations there are, the more regulations there have been established, the safer big money deems it to be to enter, to enter exposure to crypto, the more likely a lot of money is to flood into crypto in times of financial stress, or of stress testing of specifically of national currencies. This is something I was going to say I think this is going to happen, but I'm going to say this, I know it's going to happen at some point. The question is only, when is it going to happen? But looking at the national debt clock, how it's growing, looking at 2008, looking at real estate prices in the US, and globally speaking, actually, I probably see this this happening in a relatively short time frame. So let me just answer the initial question I asked. Yes, I believe Bitcoin will go way beyond $20,000. It may take a while. You see, we're seeing all these financial products being launched right now. We're seeing an entire new infrastructure being built, but we are also at some time, no economic growth can just continue indefinitely. We've never seen, for good reasons, this sounds a little illogical, but it's actually not. We've never seen just a continuous bull run in the stock markets. That is inherently impossible. There will be a bear market, there will be a crisis at some point, and I think crypto will benefit significantly and tremendously once that happens. Now, paradoxically, I also think that the longer it takes before the next stock bear market, before the next global financial crisis happens, the more significant of an effect we'll see on crypto. The more established these markets are when that happens, the better the effect will be for crypto. About 6 months ago, I wasn't quite sure that this would even be the case, that anyone would even flock into crypto, go into a crypto exposure, if there was some sort of crisis with their national currency or something like that. But these days, I think we're seeing evidence that that is in fact what's going to happen. And the more time that passes before that happens, the better it's going to be for crypto. So long term, I am extremely bullish on Bitcoin. It's going to go way past $20,000, in my personal opinion.